Hey option sharks, this is your option coach here. This is morning time, and this is something I want to cover today about the remaining days that we have in August. Today is August 18th, and then we are heading into September, which is coming up right around the corner. This video, just get right to it. I see that the remaining 2 weeks that we have of August is going to be very choppy. And I also noticed that as an investor and options trader, every time we get closer to the holidays season, right, August and beyond, this is when investors are taking profits, taking chips off the table. So you're going to see some unwinding of certain stocks that have been a little bit higher than usual, right? A bit frothy, if you want to put it that way. And you'll see, for example, Palantir, Nvidia, AMD, certain stocks that have just ran up, the mainstream stocks, and now investors are taking profits. And also recent IPOs like CoreWeave, where it has pulled back significantly, which presents opportunities as well. Okay, but keep in mind that as we going forward, August and beyond, you're going to see some profit taking, and then and also some choppy waters, I would say. But main thing is the rest of August, I will advise, if you are in the market, to just be very modest and select your strike prices at a zone where it's very safe, right? Because of so much volatility going on. All right, and then as we head into September, I believe there's going to be a lot of swings, heavy swings. Why do I say that? Is because September, the anticipation is for the rate cut. The thing is, though, the federal chairman Powell, he's going to make a decision based off the numbers, the data that's being presented, right? The unemployment, is the inflation in check. He's not going to be influenced and swayed by the administration, which is pressuring him to have a rate cut. So keep that in mind. And the anticipation is so high for a rate cut that you can speak to any investor out there. This is what the anticipation is, that I don't think we may get it, right? This could be a manipulation the market is playing, where this is what the market expects, the retail investors expect, and then we don't get that, and you'll see a pullback. So you're going to see my prediction that is in September. Again, I don't have a crystal ball, but my thesis on September is that there's going to be a lot more swings where Powell is moving in the direction where he may not do a rate cut, and then the administration will send some type of message on Truth Social about talking bad about Powell being too late or not doing a rate cut. So you're going to see a lot of back and forth between the administration and the Fed about the rate cut, where the administration is pressuring the Fed, and the Fed is saying, no, we're going to stick to our guns and follow the protocol, looking at the numbers. Okay, so August, the remaining 2 weeks, choppy waters, choppy action. Be very modest with your strike prices when you're selecting it. And then September, I would recommend just sit on the sidelines with some buying power, right? Let all your contracts expire in August. Sit on the sidelines for September and wait for an opportunity when it presents itself, when the swings kick in. Because when the swings kick in, it's a present a buying opportunity, and this is where you can load up on a particular stock that you're building a long position on, or capitalize on the option contracts, selling puts to generate premium. So that's my thesis, and this is my game plan that I'm planning to do. So the rest of August, just be modest with your strikes, and then going into September, expect the swings and just have some buying power in the sidelines. All right, so if you like what I shared today, of course, like and subscribe, leave a comment. And if you are in the markets and you need some help when it comes to trading options, or you are new and you want to learn how to trade options, I work with everybody on a one-on-one base. So you can book a time. The link is in the description and in the comment. You'll personally speak with me, and I'll give you a virtual tour, show you exactly how we work. And of course, stay tuned for the second half of this video. You'll see me in action coaching one of my members and how I help them generate income. All right, other than that, I wish you a fantastic day wherever you are, and I'll see you in the next one.
Okay, so I've done this one. Correct me if I'm wrong. So it was I purchased four contracts. Oh, five. I'm sorry, five. Yeah. Average price 345. Right. Expiry.
Yeah, 345.
Expiry. So it's today expiration in a week, August 8th.
That's right.
So and so collected. Correct me. 270, right?
345.
345. Yeah, by
times
5.
5 contracts, 1700.
1700.
1725 to be exact. Yes.
Okay.
Yeah.
And then I was not sure last week. I was not sure how to make it, so I just bought 100 SoFi for quite low price, and now have 200. So now we can make a few covered calls, right? So I have a buying power 63,000.
Got it. So your SoFi,
Okay.
you have a covered. Okay, so you bought more shares of SoFi, right?
Yep.
Yeah, so you can do more covered calls, and then you do have one covered call that's expiring today that's worthless. You see it's 0.04.
Yep.
And yeah, you're on the right track. Now, what you did for for Hood at 98 strike, that's more aggressive. That's more in the strategy of picking closer to the money strike and generating maximum premium. Because if you notice, when you pick a 98 strike, it pays out a big premium because you're picking very close to where it's trading at.
What would we do in this case? Okay, let's
No, it's okay if you're after premium, right? But if you don't, and also it's okay if you're after premium, and it's okay if you're okay with owning Hood at $98, meaning that if you get assigned the shares at 98, you're okay with that. You're okay with owning Hood at $98. Does that make sense?
Yeah, correct. Yeah, I was trying to buy, but then make an interim as well.
Yeah, so that's the thesis. That's when you do that. I just want to make sure you understand the logic behind that. So that way, you're not just picking random strike, but you understand that you're okay with owning Hood at $98.
Correct. Yes, I'm okay. Well, if let's mimic. If I decided to buy to have another sell pot at this moment, so price is 100 of Hood. So let's make a trade sell put. Let's say
98.
again 98, right? I think
that's right. You stick with that. That's fine. You already have 5. Just stick with that. It's a good strike price.
Yeah. Okay. Good. Would you make it a little bit cheaper in my place? Let's say 95.
Yeah, so if you want a better price for Hood, like you want to own Hood for a better price, then you can pick something like 93 and below.
I see. Why?
91 will be the lowest, $86 per call. That's the likelihood of you getting assigned is very low. And if you do get assigned, you own Hood at a very good cost, at a $91 strike, or at 91 cost, 92 cost, 93 cost, right? But if you believe $98 per share for Hood is good, then you go with the 98, right? But if you want a better cost basis, if you are worried about getting assigned, and you want to own Hood at a price that you want to own it for, then you can pick strike price anywhere between 98 down to 91. The minimum will be 91.
Okay, so average would be around 93, 94, right?
Yes, that's right.
Okay, good. Yeah. So I purchased what is it? Okay, open up. 1 second, please. So Hood. Okay, so expiration will be in a week, August 8th. What's gonna happen within a week?
Nothing. It's just let it run its course. Either it goes in the money or stays out of the money. That's it.
Okay, got it.
Yeah.
Okay. Okay. So for covered call, I can do it in a week or can do it anytime, right?
Covered call anytime.
Okay. Perfect. So let's make a covered call.
On what?
Probably. What do you think? Probably.
You can only do it on shares that you own.
Yeah, I know.
You can do it
so far.
Yeah. So I can do one more. Well, let's go down the list, right? Let's go down the list because we're kind of all over the place. Let's go up. And let's just start with the SoFi. Let's roll that 22 call, right? The 22 call here. Yeah. So let's just roll that to next week, 8-8. Trade and then roll this position. Yeah. And then select the same strike, select 22 strike, August 8th.
Where is it? 22? Select, select position.
Yeah. And then select August 8th on top.
Okay.
And then 22.
Why 22?
Right in front of you, in the middle.
Yeah, why 22, Anthony?
It's the same strike. You have a 22 call you did last week. This is expiring today. We can stick with the same one and just keep repeating the process.
Okay, got it.
And then you'll see that it costs you $3 to close the old contract, right? It says buy to close, debit $3. Credit is 46. You collect the difference of 43, right? And then hit continue. And this is how you sell. This is how you roll your cover calls. Change it to 0.43.
Okay, hold on. 0.43. Why?
Because you're not gonna get filled. It's too close to ask.
0.43. Okay.
No, 0.43. 0.43. You always want to 0.43. Yeah, there you go. Let's just see if we can get filled for that. The spread is 0.42, 0.45. You can get away with $1 more. It didn't fill, but we'll leave it alone. It'll probably get filled later on. We'll just keep going down the list. Yeah, we'll just keep going down the list. Just leave it alone. It's gonna be pending. Go back to the main screen. You see it's pending. We'll just leave that alone. Let's go to the next one. Mara 19 put. Let's roll this put out to 8-8. Same thing, same strike. It's in the money, so we want to just keep rolling this and keep collecting credit. 8-19. Put
19, right?
Yeah. How come it's gray? Can you select that?
Which one?
And the 19 put August 8th.
What are we doing now?
I think it's click on August 15. Tap on August 15. And then tap back to August 8th. Okay, now you can pick 19. Yeah, there you go. Now you pass it.
Yep.
All right, there you go. And then just go with credit. And just go with that. See if you just leave that alone. See if it gets filled. Oh, that's too close. But we'll go back to we'll edit those as they are pending. Good. You already did that. We leave that alone. Excuse me. Palantir. What is Palantir? 822, 170. That's fine.
It's 8:23. It's about a few weeks. Yeah.
Yeah, so we have time. Okay, so now let's go manage those pending orders to flow up, and click on the SoFi. Yeah, and then let's just replace this order, and just type in 0.40 is fine. We'll just go with the bid. Yeah, let's just process that. Okay, let's process that one, and that will get filled. All right, that's done. And then let's go to the next one on the pending list. Tomorrow, yeah, that one. Replace this one. Type in, yeah, 0.13 is fine. Let's see if 13.
13. What's that? Limit price.
That's just the spread. Limit price is just the spread. It's the bid ask the buyers and sellers at what price. I don't know if it got filled. 0.3 is still there. That's just interesting. Let's replace it one more time. Type in. Let's just do 0.10.
0.10.
Yeah, that should get filled. Let's see.
All
right, great. That's done. Okay, good. So we just roll that out. You collect $10 for that. All right, and then now let's do the cover call. So you have all your position options now. So far, you have 200 shares now, right?
Yep.
So you can do one more cover call at the same strike at 22. So you can go to just type hit trade, and then trade options, sell call. Yeah, and then pick 22.
Wait, 22.
It's the same strike that you have for the other one, so we just do the same thing. Yeah, and just one. Yeah, and just execute that one like that. There you go. So if you go back to your main screen, you're going to see now there's go up to your options. There's going to be 2 cover calls there now. You see? SoFi 22 call, 88, 2 sells. Before there's 1 because we rolled it, and then we just add another one. So there's 2 because you have 200 shares now. Does that make sense?
Yep.
Okay.
And we still have buying power, 63,000.
So you have more cover calls. Let me see what else can you do. You can do 1 cover call on Robinhood if you like.
I would love to. Yeah.
Okay. So then just tap on Hood. And are you trying to keep these shares or?
For sure. Yeah.
Okay.
That's my question.
Sell call. Pick a strike price more out of the money. So this is where you get to keep your shares, but you're also you're generating income from ownership. So go up. You can look at a 110 strike price. Yeah, 110. So you get $73 per that only one contract. Right. So you keep your shares. The chances of Hood going to 70 to 110 is really unlikely, and you're just making money off ownership. You could try 0.72. Oh, it's okay. Let's just go with that. So,
okay.
Yeah. It's already at 0.72 now. No, change it to now. It's moving fast, but it's okay. You get filled here. Okay. All right. So that's done. So now you have 1 cover call on Hood at a strike price of 110. And you have 2 cover calls of SoFi at 22. Okay. And then let me see what else your positions, your stocks go now. That's the oh, you have 600 shares tomorrow. You should have cover calls on that too.
Yeah.
What's your tomorrow? What's your cost on tomorrow? Does it go down?
I lost.
Okay. 1851. Okay. So let's just trade. Trade options, sell call, August 8th. Look at a 1650 strike. $28 per contract.
And with the delta is 22, right?
22.
Okay.
Yes, click on that one. You have 600 shares with 6 contracts. Yeah, that's good. Let's process that one. So this helps you reduce your unrealized loss. You had an unrealized loss of $1,700. Now you just made $167. And you keep doing this process, you will slowly remove the unrealized loss. All right. And then, but we do need to monitor it because we're selling a cover call that's below your cost, meaning that we want to get to the point where we can sell cover calls at your cost or higher. Okay, but either way, you're getting coaching, so we're going to monitor it together.
Okay, and I don't want to lose neither SoFi nor Palantir, right?
Yeah, you're not going to.
The shares.
SoFi, you're close. SoFi, you are picking closer to the strike, 21, because it's trading at 21.26. But again, SoFi trades very range bound, like very tight. So 22 is okay. That's why the first contract last week expired worthless. All right, so that looks good.
And we still have buying power.
I would recommend just keep doing good because that's the best premium. The strikes are very good. It trades. It's actually at a range bound point. So I would continue to trade Hood, HOOD. Yeah, and then just trade options, sell put.
Sell put, right?
Yeah, just stick with 98, $283 per contract. That's very nice. And then you can do about
sell.
Yeah, sell. You can do about oh no, you have 32,000 buy power, so you can only do 3. So 3, yeah, and then go with 2.85.
2.85.
Yeah, let's process that. There you go. Yeah, so you made a lot because you did the other 98 for 1,700, another 900 here. You're like about 2,500 for the week of August 8th. So very good. Yeah, and that's it. That's how you do your cover calls. That's how you sell your puts. That's how you make instant trades. And also how to generate income to offset your unrealized loss. That's very important as well. That's what we're doing.
I will rewatch it again because I need to. I start to understand what we're doing. Finally, let's say it took me quite a long time to understand.
Not a long time. Imagine trying to learn this by yourself. How long that would take? Right?
No, almost. I'm not sure ever.
Yeah, with coaching, you learn this so much faster. So because this is the best way to do it. But yeah, you're good. You're all set now.
Anthony, question for you. So if we do a covered call, I don't want to lose the shares. Do we have to roll just before expiration, or it doesn't have to be? They can expire naturally.
Say again, what's the question?
Okay, so I have my shares. I don't want to lose them, right?
Yeah.
I want to keep them. So if we make a cover call,
Yes.
by the end of the expiration, do I have to roll it just before expiration? It doesn't have to be. It could be after.
If it depends on if the cover call is out of the money or in the money, right? So if it's out of the money, you don't really need it. You can just roll it and do the same thing for the following week. Okay, but if it's in the money, then and you don't want to lose your shares, I recommend rolling it on Thursday.
Okay, got it. That's my question. Yes. Okay, perfect.
That'll be the recommendation.
Should we have a next meeting? Let's say Thursday at 1 p.m.
Whatever you like. Yeah.
Yeah.
Just pick once per week, and then we go from there.
Yeah. So it should be a day before expiration.
Yes. That's if it goes in the money. If it goes
Or,
in the money, then there's a chance that you can get your shares called away. There's a chance. There's a really low chance, but there's still that chance. If it's out of the money, nothing happens.
Okay.
No one's If it's in the money, there's a higher chance on Friday the shares being called away. You're better off rolling it on Thursday.
Okay. Do you have a time at, let's say, Friday at my time at 11 sharp? A little bit earlier than today?
You got to look at the calendar. And right now, Friday, we have the same time over and over again. So we can stick with that, right? Or
yeah,
whatever.
Fine. It's perfect for me because Friday is my off day. I'm less stressed, let's say this way.
All right.
Because if it's a Thursday, it will be my lunch time. It's usually unpredictable.
Okay, sounds good.
That was my question. Perfect.
We stick with the same game plan, okay?
Perfect. Thank you very much, Anthony. So you're going to send me the today's video, right? Okay.
Yeah, I'll have to send to you once it's done uploading to the cloud.
Perfect. Thank you very much. I appreciate it. Thank you. Thank you.
Okay, thanks for your time. Yeah, enjoy your Friday, enjoy your weekend, and I'll see you in the next meeting, okay?
Sure. Thank you.
You're welcome. Bye-bye.
Bye now.